All right. Let's see what happened today. Having this session because I missed out today. Started a new job. Wanted to see what happened today and what we could take advantage of. So let's first start off with looking at SPY. We can see SPY dipped today. Started today at 390. Ended the day at 386.50. So it fell. See, it keeps doing these lower highs right here, lower high. Thinking if tomorrow this continuation, I'll try and break this 50 average. Let's take a look at the hourly. Hourly, you can see higher lows, higher lows, higher lows. Let's see what happens tomorrow. A repeat of this might happen. Price goes above the 200, the 50 on the hourly, just for it to come back down. Let's see. What I would like to see it do is break below 380 and stay below, continue to break through. See, there was a gap up. This is Monday, a gap up on Monday. But it doesn't seem to be holding this strong, so volume is dying on this. All right, let's see. Start off with stuff under 20. Let's see what's good to play. This is just all off of my scanner. Let's see what this one. This was I looked at this one the other day. Looks like it's bounced above this 20 weekly. Let's see what happens when it's 20 weekly. Maybe I'll continue up. See this pattern that I form. Lower highs, lower highs. I mean, not lower highs, higher lows, higher lows. It's kind of forming a pendant. If this thing takes off, we could see a break. See on the monthly, it's been range bound between 16 to from 16 to about $10. It's been ranging. So if we can see this break, probably see another long run up. I believe I went over GPK the other day. So the last time I had my analyst stream. This one seems like it's just new. Healthcare. Don't know too much about this. Doesn't look too good. Move on. TU. Okay, I actually have. This is one of my positions. I actually had a stop set for $20, and I got into a position at 21, and it was 4 cents from hitting my stop. But it held out. This week is actually doing pretty good. So I saw that there was range bound between 20 and around 15. It was range bound like that for a while. And this right here peaked up above 20. So I'm hoping this is a breakout. If this is a breakout, it'd be great. If not, I have a stop set right here. So if this is a breakout, let's see a run to the last run. It went from around $7 to 18, so it doubles or so. So let's see another run from 20 to 40. That was over the course of like 5 years. Consistent gains. So let's see if this is a good one. It'd be a 5-year play. Chinese stock, I see. Actually, this is not Chinese stock. Real estate, medical real estate. So like I think hospitals and stuff. Yep, hospitals. Oh, that's actually pretty cool. This actually might be add that to my watch list. Surprised this isn't doing better. Chart looks pretty good. The monthly chart looks pretty good. Weekly is looking like it's at a buy area. A daily is just a noise. Play this longer term. Few months. Western Union. Financial. Not the greatest. Say they haven't really done anything. The gains are here and there. If you can get it lower, around 20, 21, that'd be probably my entry. Okay. I don't know what happened here, but American Homes, what do they do? They're REIT also, single family homes. Okay. Maybe if you anticipate the real estate market to come down and you don't want to be a landlord, you could probably own some of these REITs. Let's see, did they pay dividend? Yeah, 20 cents. Barely anything, but it's consistent. Since 2016, you get 20 cents. 20 cents every year. Kirkridge, the coffee machine. Well, been consistently going up. Kind of flatline on the weekly. Flatline, and then they just notice this pattern. They like to go flatline for a little bit, and then they have run up. Same pattern happening. Flatline, run up, flatline, run up, flatline. So if we anticipate, I think that the run up is happening in the next couple months. It could potentially run up to from here. Actually, that's not a huge run up. It went from 2017 to around 22. Oh, what is wrong with this chart? This chart is showing negative numbers. I think there's something wrong with this chart. It's showing negative numbers. Is that the only chart that shows negative number? Yeah, I think there's something wrong with this chart. It's showing negative number. It went from negative 20 to positive 20. So that's the first time I saw something like that happen. I wonder if they had like some split or something, or there's something wrong with TOS. Okay, moving on. I think these guys that do steel. Oh, I am wrong again. Real estate. Not bad. Could be range bound. See, do they do dividends? They have a dividend. Yep. The dividend 144. They've been increasing it 1 cent every year. Not bad. Their earnings been somewhat consistent. These REITs, they have to pay out like, what is it, like 80%, 70, 80% of their profits to shareholders. PPD, huge gap down. Wonder what that was from. But if you bank on this thing happening, it looks like it's holding above 30. Maybe set a stop at 30, get in, set a stop at 30, just let it run. Slow plays though. This is from 30 to, if it can run up again, 30 to 50 will be good. 30 to 60, 70. Tenable. IT ratings been pretty bad for them. Reduce, sell. But these guys seem like they're pretty new, just out in 2019. Charts don't really show much. So all pattern play. Let's see if it'll bounce off here, this area, the 38. The 38, if it can bounce off there, the lines up to 200. Something like this happen again. Let's see if we can bank on it, try to take a risk on it and see if it runs up from there. I might want to add this to my list. Maybe a good play. I would like to catch that run up when it happens. Keep my eyes on it. Just add it to my watch list. Genpact. Wow, yeah, IPO 60 and it just came down. IT again. Fintech company. For these ones, for sure, they will have really, really sloppy. Actually, they actually have earnings per share. Wow. Okay. So that actually piques my interest. Something that has earnings per share. They have a dividend, 12.8%. Wow. Oh, it's not much, but 40 cents. 40 cents per share, $40 stock. That's not bad. I'll keep an eye on this one. G is the symbol. Apartment income, another REIT. Seems like my scanner caught a lot of REITs. This is a relatively new one. They do apartments. Oh, that's a lot of apartments. 98 stable property of over close to 27,000 apartment homes. Wow. Okay. Washington, D.C., Denver, Bay Area, Los Angeles, Miami, San Diego, Philadelphia, Boston. So these areas right here, see they're the high cost area. I'd like to see this fall a little bit. Maybe see how this weekend. I want to see it. I want to see it if I can get it around 40. See it fall a little bit more. 40. I think it'll be a good pickup if around 40. Let's see if they have any options. They do, but their options are really crappy premium. Dollar spread or maybe worth keeping an eye on. Wow. This one, Knights Transportation. I think they take you back to the medieval days. Let's see. US, Mexico, and Canada using its dry van. Wow. Dry van, refrigerated, flat bed. I can't speak today. Specialized trailers. So the transport stuff. Oh, okay. 25,000. I don't know how they have good earnings. Their earnings been there. Interesting. Let's see the weekly. The weekly seems to be forming these patterns. So if I can catch it on its next swing low, around 40, potential play right here. Just gotta be patient with these. I don't know about you guys, but I work full time too, so I look for a lot of swing trades. That way I can double dip, do my research at night, and then put in my orders in the morning. They make it, they make it. They don't, oh well, lose a little bit of money. But my winners run really well, so. Okay, Brookfield. I like the way the weekly looks. They do renewable energy. Not bad. Earnings per share is crap. But I don't think anybody plays these guys for their earnings per share. I would like to see it hold as 200. So maybe a few more days of watching this one. Brown and Brown. Nice consistent stock. Year-over-year growth. See this little pattern here. Weakness. Lower highs. Let's see this month. I want to see this month push it down to this 20 monthly average. Capitalize like this right here. If it can get back down here, I'd like to capitalize on it. See past data, bounce on that 20, that 20, sometimes 50 if you're lucky. This was the financial crisis, 2019. Before that, the 20. So yeah, I think this is might be a play off the 20. The lower below 20 would be great. So 20 is sitting right at 40, 41.50. Anything lower than that, 40 will be a good pickup. Slow plays. These aren't going to give you 1,000 percenters. This is where you park your money. Park your money in a few years, you come back to some gains. Especially if you're somebody who works full time. You just want to park you get a better return than in any bank. Better interest, better than that 1.001 interest to give you a penny every month. Park it in here. Maybe say you park it in here, maybe something like this will happen where it went from 26 to 45. So $20 up, right? So almost double your money in a year's time. But you might get some years like this where it went from 25 to just 30. So $5 up, not bad. $5 up. So we do the math on there, right? 5 divided by 25. That's 20% for a year. You ain't gonna get 20% anywhere. 20% is decent. That's on one stock. Imagine if you have a few stocks like that giving you 20% return. I don't know about you, but I'm happy for 20. Fastenal. Looking like another decent slow gainer. But maybe watch for it to maybe fall, stumbling right here. If it breaks below this range, pick up around 40. If not, this could be a range, could be between 45 and 50. So if we see a range forming, but this is the monthly chart, so take a few months. If you see a range forming here and here, like here, we could take advantage of that. For something that I'm playing off the monthly, I like to hold it for like maybe a year or two. That way I take advantage of not paying capital gains tax on it. Let's see if they have any options. They do, but they have only 30 days out. Not horrible for this stock of this price. These stocks, these premiums are not horrible. Slow mover too, so you probably go two or three strikes out. If it gets called away, well, you're walking away with some gains and premium. Very good. Win-win situation. Apollo Global Management. So I like this pattern. Keep in mind this is a monthly chart again. So multiple years are going down and actually recovered, and it just kept going. So it's going off the 50. I see this pattern happen a few times. So you see the touch 1, 2, 3. Let's see if we can bank on it. Triple top, Williams W. Like he talks about. If this one, if it breaks out, you could probably see this going to 60 or more. 60, 70. $20 from current market. Or if it falls, even better. If it falls, try to catch it down around 40. So that's two ways to play. See this range right here, this top right here. If it breaks above it and stays above you, you can play the momentum going up. If it falls, let it fall for a few months. See where it holds. Pays to be patient, to have patience, and try to pick it below 40. Yeah, Nikki, no problem. I'm doing this because I missed out on the market today. I started my new job, so I didn't have time to look at any of the charts. But so it's homework time. Planning these trades. To be successful in trading, you need to plan these out. Look at where you could play. Build a list. Build a list of things that you could play. Not every single day you're gonna get an opportunity, but if you know what you're doing, you can wait for those opportunities. Wait on the sidelines with cash at hand. This one, what is this one? IT also. I think they do like something voice over IT, voice over network, maybe. Earnings per share, decent. Book value per share 16. So it's way over book value. But looks like it's on its way down again this monthly. And we play it based on the 50. You see, common theme of all these stocks that I look at is they try to hold their 50, either on the weekly or the monthly. It's 40 again, worth watching. Yum of China. These are food guys. Pizza Hut, KFC, Taco Bell, Little Sheep, restaurants. So they have, this is Yum of China. There's also regular Yum. I don't know what the difference is, but yep, KFC, Pizza Hut, Taco Bell. See this right here? It's close to its 20. Big good pickup. Consistent. We might see something like this again. 2009, 2010, where it sort of just hugs that 20. And then when you least expect it, it never returns. So maybe play it based on that monthly chart. So this is a play where you park your money and do something else. Nikki, I don't do crypto. I don't know enough about crypto, and it's too new for me, for my liking. Too crazy. There's a lot of people who make a lot of money on it, but for me personally, crypto is something that I will want to stay away from. Maybe in a few years. So right now, there's just too many fees with it. There's a fee going in and there's a fee coming out. So I don't want to really take that. It kind of reminds me back a few years ago when there's fees on there was fees of buying stocks, buying shares. It used to be, depending on the brokerage, it could be like $10 in and $10 out, so $20 round trip. So if you get into any stock, you would have to wait for it to go up and make back that $20 before you even consider getting out. Nowadays, all the shares, you can buy all the shares you want for pretty much free. So maybe crypto will get there. When crypto gets there, I would definitely like to trade some crypto. But as of right now, there's just too many fees, too many things that could go wrong. So it's also good to, for me at least, my thinking behind not trading crypto right now is it's good to let all the weak ones filter themselves out, and then you get the strong ones that you just focus on, that it's going to go. Because when you're trading, it doesn't really matter how much price or how much something costs. It only matters if you can get some return back on it and how stable it is. All right, moving on. Plan. IT. Cloud-based planning. It's pretty new, 2019, but the way it's going. See this right here. If it falls back to 40, which will be literally losing half its value, Or if you continue to follow on the weekly, a few months out, see if it holds this 50. So it holds above 60, 61 or 60. Now go up. I see some comments on my. Hey, Powell, I just saw your comment. You said, how's my new job? That's good. Orientation week. So a lot of me doing nothing. Okay, plan. So this one, 45 to 50 to 45 is when I would consider adding some shares. After that, or if I can see that it can hold 60, I'll consider putting some shares in. This might be due to COVID last year when all the stock fell. This lines up with it March, and then April, and then it bounced back. So let's see what I want us to do with the next few months. If it can hold 55, 60 could be good. Or if it falls there, try to aim for 40, the $45 mark. Then 50 on the daily, it's doing this pattern. So this 200 average is sort of a magnet. Whenever anything comes to here, if it can't hold it, it dies, continues to die, or if it can hold it, it bounces back up and makes new high. So that's what I keep an eye on. Plan. What is this? Worldwide. Otis. Worldwide. Escalators. Freight escalators. I like this pattern on this weekly. The last 2 weeks, it looked like a bounce. A play you could potentially do is set a stop below here. So right now it's at 65. You set a stop below 62, or the more room you give it, the more you're risking, but the more potential it could bounce off and go higher. See, it's been range bounce since August. Well, since July, actually. If we can break out this range, see it shoot up. So this 70, break above 70 and stay above 70. Forgot to check to see if they have any earnings. Actually, they do. Earning per share. Wow. Did they just? It looks like they just started to do dividends also. It's a buy rating from research team. It's a third party. Okay. Potential play. TJX. Every time it gets this far from the 20 weekly, it dips. See it happen. 1, 2, 3, 4, 5, 6, 7, 8, 9 times. Every time it gets this far up. So Discount will be under 60, under 55 discount area. Let's see. Looks like it's gonna wanna fall. The last 2 months, price hasn't been moving up. So discount is coming for TJX. Not quite there yet, but it's coming. Novo. Diabetes and obesity healthcare. Wow, they have earnings. It's a healthcare stock that has earnings and a $1 and almost $1.50 dividend. Wow. This is a fine. This is a fine. I think this is a good fine too. It's a great fine. Struggling here. But if it falls, if it does something like this, or if it does something like this again, doom. Deals. Or something like this would be great. 65, aiming for 65. You can see it's been consistently going year over year. It's a good find. So hopefully this gives you guys something to look at. NVO. I think this is a good find. Actually, let's look at this options. The spread's not terrible. So if you own shares, you can do some cover calls and get a little bit of money back as your shareholder. And you're getting dividends. So that's double dipping. It's good. Might even want to sell puts until you get in. If you could do that. Just have to have money for 100 shares. Yeah, the last 2 weeks. If this happens again, the last, like this right here, be good opportunity to get in. See, these opportunities don't happen too often, but they do. When they do, and you have this on your watch list, start buying. Ooh, I like the look of this one. Let's see. Oh, and it has options, weekly options too. Oh, it makes me excited. Mixed reviews. Some people like it, some people don't. IT. There's earnings per share. Almost consistent. Does it have a dividend? Almost a 10% dividend too. Okay. Even more, even better. Double top on the monthly. So seems like this 80 is a wall for it. $80 seems to be a wall for it. But if it can come back, pull back to that $65 mark, be good, because then you pick it up for less. You still get the dividends on top of it. And if you know how to do cover calls, you get the cover calls, the premium of cover calls. Premium, there is a spread on it, but if you're selling, try to get as close to this ask price, right? So you can go a few strikes out. So try to get like $100, 100, 150 every month for 100 shares of this. Yeah. if you have the patience to wait for it and wait for it to go to 65. So the play with the cover call will probably cost you 6.5K. 6.5K is better than spending 7.5K right now. Save yourself an extra 1K, do some cover calls. Easy money. Easy money with this one. This one you just have to be patient. So a few times you see it bounce off this 50 moving average. Rarely do you see it bounce off this. This was a crisis, the financial crisis of 2008, 2009, that made it go this far. Which if you would have known about it, picking something up there, and especially if you're a long-term holder, something at $9 and now it's 90. Good play. Watch list worthy. And as we keep going up, we keep looking at these more expensive stock. I've noticed that the more expensive stock they have a better trending monthly. I like to play these better trending monthlies. They're not quick money, but they are consistent money. And I take consistency over quickness any day. Yeah, even in the crisis, it bounced out fast. Well, NEE, next Era Energy. Let's see if they do any renewable energy, or if they just do like gas and whatnot. Florida, okay, where all the old people are. Yep, diversify and clean energy. Wow, so these, if you're looking for something with clean energy, something that will be consistent, this is looking like it's approaching. If you're playing off the weekly, it looks like it's sort of holding 70, but if it doesn't hold 70, I want to see a hold above 65. If you can hold above 65, I would consider that a buy for me. You can even try to buy it now, but just keep in mind that this is what the monthly is doing. So this candle, it could potentially turn red. It's such a small candle. It could potentially turn red. And when it turns red, I wouldn't panic, but just know that it's an opportunity. Maybe if you're playing off the weekly, maybe slowly get into a starter position and then add on every 2 weeks, add more shares. Yeah, I wouldn't go, especially if you see something like this, I wouldn't go all in right here and think that it's gonna shoot up to 90 again. Slowly add in. If it goes up, you can still slowly average in. So your cost might be climbing, but in time, you'll get it back. This one, I believe actually it has 30 days. The spread's not terrible. It's just not, because it's a less volatile stock. There's less option, but for these ones, you can safely go 3 strikes out. Just wait for it to climb on a green day. Then you do some cover calls. NEE. GoDaddy. GoDaddy is actually something that I played on my paper account. I actually really like them. Bought a few domains. Stumbling. It looks like it's stumbling right here. Stumbling. So 75. If I can get a 75. Let's see. They don't have weeklies, but they have monthlies, which is good because I play monthly. When I do CCs, I do monthlies. So, and looking at the chart, how It's not too terrible. So I can do probably do like the 90, 90 or safer 95. Get $50. Not much, but it adds up. Yeah, especially since I'm more of a long-term guy. So more of a long-term, more of a swing trader. Trading is just a way to help me multiply my money. So I don't care how long it's gonna take, as long as it keeps multiplying my money. Keep pouring money in every 10,000 I pour in, I make another 10,000 on the top of that, and that 10,000 makes another 10,000. So you can see the compound interest on it. You consistently grow too. You're not taking so many losses because you're in the market all the time. GoDaddy. Edward Life Science. I really like these charts, these monthly charts that look like this. It gives me hope. When I see a stock that has a monthly chart that looks like this, and I know that it's a time when everything is dropping right now, it's a perfect buy for me. You just have to be patient with it. Look for, it's like Black Friday. And so, yeah, EW. So just within 40 minutes or so, we already found a lot of plays, potential plays. Monster Energy. Yeah, even Monster. That's when it first started booming. It likes to have these runs. I mean, this is what it's been doing. So it's been keeping above that 20 weekly. If you want to take a risk, set a stop below at 85 and see if it can keep going, because it likes to have these explosions, these mini explosions. And it looks like this is probably late, not late, but middle of one. So from here, maybe it goes to 120 or maybe 140, just based on what has done in the past. For sure. So it's super high from the 20. And every time it gets super high from the 20s, it kind of likes to come down. So that's also something to be careful of. We're just using old data just to figure out, to give us a clue of what the stock could potentially do, right? And that's all we can do. We see what it has done before and try to play it to see if the same outcome has come. Somebody said check open. I think I might be in open. Open's a pretty good one too. I think it's good. Look at this pattern that it's been doing on the daily. It's been holding that 50, peaked a little bit here, but the 50 average is, or any moving average, think of it as just like a fence. Things can go through a little bit, but still come back. Looks like it's holding here. These candles are they have wicks to the upside, so I mean it could fall. It could do a little this kind of pattern where it slows down. But if it does, then if it breaks this 50, then continue to look at it on the weekly. You see the weekly, it likes to keep this above the 20. So that's something that you can keep an eye on. I don't know. I thought I had I used to have position in open. Nope, I sold that position already. Okay. Monster Energy. Let me add that to Monster MNST. Lumentum. Lumentum sounds like okay. So I think they do smart devices like smart lights and stuff. It's been keeping here, so it's close. It's close to. I would say I would probably even start buying now instead of stop at 80 right here, or even maybe even lower. Maybe start a starter position and then add on to it. I like the look of this one. Not fast growth, but consistent. With stocks that are consistent like this, you like to keep on adding to them and letting them grow over time. Light, LITE. Paycheck, payment processor. Stable-ish. The last almost the last 10 years, they've been pretty stable. Came up. If you look at the data, the 20, so around 82. If it falls around 82, 80, I will consider that a pickup. At the moment, maybe it falls another $10. But it looks like it definitely looks like it's gonna it's looking to fall right here. PAYX, paychecks. Datadogs, Datadog is a new kid on the block. New kid on the block. So a broke character when it closed below this 20 weekly. So a broke character here. Let's see if it forms a new one by respecting this 50 around 85. Around 85, it holds. It would be a good play. Hold above 85 and then a stop at 80. It's $5 stop. DDG. I think I heard a lot of people talk about this one. EXPD. EXPD. Mixed reviews. Transportation over seas, I think. Earnings is in May. So there's quite a bit of time. It's been range bound. So it looks like 95 is the resistance. It peaked up above here, but there was a false breakout. Let's see, it died. So false breakout right here. Let's see if this one comes back above and tries to break it. XPD. ABC. ABC. I like this. I like what I see here. So this range was from 2016 to 2020. and then it broke, and it's staying above it, and it's close enough to the 20 monthly right now, where I would consider this like a buy right now. ABC, 1, 2, 3. Let's see. It has weekly options. Pretty wide, but better to buy the shares and then just do cover calls against it. So try to get as close to the ask as possible. So for about 10K, you could probably try to get like maybe 350, 400 a month on it. So if you can do that for a whole year, right? Try to get, let's say, be conservative, say 350 times 12, right? That's 4,200 divided by your investment of, so that's a 40% return if you can do cover calls against it. And you're doing like a cover call that's out here. I try to get close to 350. Or if you want, it's like it's a pretty slow stock too. So you could be a little risky. You can go closer, go like 2 or 3 strikes right here. So it'll be a cover call zone. CCIV here. CCIV. I know a lot of people has been talking about CCIV. So CCIV is probably the ugliest thing I've seen, but since people asked me to talk about it, I don't like the fact that it does this big run and then just drops out of nowhere, right? This does not signal to me as being stable at all. But if you, and probably everybody who plays it is probably just playing the pattern. So around 20 is where you will pick it up. Probably set a stop below. So maybe 18. But at least wait for a confirmed bounce. You don't want to just go in and then have it fall because it's an ugly fall. When something like this happen, your stop won't matter. It will gap your stop and you will be stuck. See, if you had a position here, you set a stop right here and you gap down below your stop. Well, guess what? You open the next day and you sell it right open right here. If you have a stop. If you have a stop limit, it never sells. Never sells and you keep losing money. So this right here will kill your stop. Your stop won't even trigger. So if you play this, be careful. I see it's holding, it's 50 on the daily right here. So that's one way you can play it. Okay, let's see, where did I leave off? Checks, ABC, CP, CPRT, Coparts. I think they do auto parts. Actually, nope. Is online. Oh, yeah, they do something with cars. Online auction. So the US, Canada, UK, the United Arabic, okay, Brazil. Wow, a lot of place. Earnings per share going up every single year. Good sign, great sign. Charts looking good. I see this pattern right here. This 20. 95 would be Gossen. Slowly making lower highs. So this one it might bounce up. If it bounce up to like around here, around 116, 115. Let's see if it dies again. If it dies again, maybe pick up around 95. So 95 is down here below the 50 the 50 weekly. I'll keep that on my watch list. CRPX. Or if you guys are long-term investors, and you're not trying to time the market, just continue slowly buying into this one. Definitely see, over time, you just give it enough time, it keeps climbing. So if you're somebody who has a 10-year outlook with your stocks, man, 10 years from now, let's see, the last 10 years. So it went from, let's go from 2020 to 2010. So it went from $7 to 100. It's a huge gain. Maybe in the next 10 years. Next 10 years, you might see this all the way up at like 250, 300. You have a 10-year outlook. That's how you get those big percentage gains. Easy big percentage gains. Allstate. What's in your wallet? Actually, I don't think that's their. I don't think that's their catchphrase. So it looks like it's holding. Bounce right here. It broke this lower high pattern right here. So good chance that it can go again. This thing goes 130, 140. Or just 130, 140 is within the next year or two. Insurance company. Somebody wants to know what my technical analysis on some of these stocks are. These are all like new stocks. So I think speculative plays, risk only a little. You can see it's doing this this higher low thing every time it falls. Maybe you can set up for another thing, another pop-up like this. So RLAY, you could do that for. Yeah, it's relatively new and pretty violent. So if you play this stock right here, see it go up and break above 60, I would get out. So that's double your money if you get in there. So that's one play that you could do for this one. These are pharmaceutical, right? Not pharmaceutical, they are healthcare. Healthcare is a sector I don't really like playing because they're really violent when they move and they die really fast. So, but this one seems to have this structure. I'm pretty sure I'm not the only one who noticed the structure. So you see it's slowing down, it's dying right here. The candles are getting smaller. So it could be a good play for you. Just know your risk when you get in. Never get into a trade without knowing your risk. Oh man, this one, Smile Direct. I think Jimmy told me about this one. Smile Direct is very, very slow, but you could see similar to the pattern of last one. It's making these higher lows. If right now is at a low point, so perfect for adding in. So I think SDC is a pretty good ad, a pretty good ad right now. You can see every time it tries to make a new high, so you could maybe try to get from here, so 11 to around 15, 16 or maybe 17. See if that's worth the risk for you. It's about $5 gain on the stock, so 50%. Probably maybe reachable within the next month. So April, mid-April, if things go well. If not, then it does this kind of thing. It might take 2 or 3 months. So take that in mind. 2 or 3 months could be a play for you. It's SCC, Smile Direct Club. OPTT. And you really like these little stocks. Yeah, all pattern play. So notice this pattern. I might even say that this has broken the pattern. I might say it's broken the pattern because you never seen it broke the 50 by much. And right now it's hovering. So it's similar to this right here. It could recover, bounce up, but that's a risk that you have to take and maybe consider. So maybe set your stop, and it's a pretty wide stop to 25 cents. So that's a play that you could do. And then maybe get out when it gets to 7. See, your last one is CYH. CYH. Something has happened to the stock, but it looks like it's coming back on the monthly. The weekly, I like this where it looks like it's coming back. I like this one out of all your plays. I think I like this one the best. The stock that you asked me to look at. Higher low, higher low, higher lows. Looks like there's a wall at 11. So if it can break that 11 wall, it could go maybe to 14, 15. So get in at 8, probably out at 15. Aim for 15. Be happy with 12. Okay, Solo Her, you asked about IDX. IDEX. Idea Dynamics. New stock as well. This one is a little bit more crazy. There's no real clear pattern because it did something like this before. Then it's just kind of a little died off. Then it popped again. Then it died off. Then it popped again. So this one, this could go on for a while, or it could just take off. But maybe play off of, maybe set a stop down at $2. But that's a pretty big stop. That's like almost $1. And I mean, you say it's $1, and it feels big because you have to take the percentage into mind. So right now it's at 340. This was or even number 340, and you would try to get out at around 250. right? Stop at 250. So 340 minus 250. So 90 cents. So divided by your entry. So that's a 26% risk. That means that for you to make back your risk, the stock will have to go up 26%. And it could be worth it. It could be explosive. So like something like this, like if you had a stop set down here, this more than makes up for it, even though it was a wide stop given the stock size. So something for you to consider. I'm not going to tell you if it's right or wrong because, that's for you to decide. I could just tell you the numbers. Hopefully that clears up. Let's see, MCC, MMC. I like this monthly. 108, 110, 108 is where I would consider getting some. Sad it only has monthlies. The spread isn't horrible, but there is literally like no premium on it. It's probably because it's a consistent stock. So consistent stocks are not exciting. They don't have a lot of premium. But it's one of those where you park your money. Medtronics. I like this one too. I typically like stocks that have good monthly charts. I go backwards. I look at the monthly first before I even focus on lower time, because if it doesn't have a good outlook, like a year-to-year thing, then if you're wrong on these lower time frames, you don't have anything to bank on. But if you are wrong in these lower time frame and the monthly is good, could become a long-term hold for you if you're wrong, and you can just ride it again. But for this one, it looks like it hit the wall at 120. So if it hits the wall 120, I want to see it fall to maybe 105. MDT. T-Mobile. T-Mobile is I actually have a position in T-Mobile. T-Mobile, let's see. My position in T-Mobile, I got this back in probably 2018. I want to make sure. Let me make sure. So let me log in. Yeah, I'm pretty sure I got back in 2018, maybe 2019. So played this pattern, saw it get close to its 20, and then I bought in. It broke. I remember when it broke around this. It broke this range right here. So right now it's falling, so it's good. Actually, my T-Mobile. Let's see. Yep, 2018, September 2018. So around here. Around here, my cost average was 65. So 65, yep, 65 puts it like right here. That's when it broke, dipped down, and then it just kept going. So that was like a breakout play. So you see these patterns, they happen. You see it, take advantage of it. They don't happen too often. Every year, maybe once if you're lucky. If twice is really unheard of. But if you can definitely see it, you can take advantage of it. So these red days, I actually look forward to these red periods. So I like to buy them low, sell them high. So this kind of trading style, you're not going to be picking up stuff every single day. But if you keep looking at it, you see these patterns and you see how you can pick it up shares and make money off of it. Right. So let's see. Somebody has another request. INSG. Okay. Wow. Okay. I like this one. I like it because this is like a setup that I would play. So this is actually a good one. So with this one, notice how the 20 average, it keeps bouncing off. Sometimes it bleeds through. These are gold right here. So with how strong it's been falling, maybe wait 2 or 3 weeks, or maybe just wait for this monthly candle to finish out to see how deep it goes before you get in. You have to be a little bit patient with it, but the more patient you are, the better of a position you get into. So wait until this monthly candle finish. If it finished and it looks like it went back up a little bit, that's okay. You can still get in, because you have to have an outlook of, hey, I'm gonna wait, I'm gonna give up a few dollars so I can make, for every dollar that I give up, maybe I make $10-$20 back. So this is a good one. Keep an eye on it. Wait for this monthly to finish and then see how it goes. If it goes lower, that's even better deal for you. If it goes a little bit higher, that's still good too. That means that it confirmed that it's holding above this 20 average. Okay. So don't rush into it. It's a good one. It's a good find. I'm keeping it on my chart. I'm stealing this idea from you. Okay. No, it doesn't look like this anymore. Where did we leave off? This one. Holding. Keep a watch for 115, 110 range. 115, 110. Let's see, what did they do? Oh, wrong tab. Okay. The San Jose, California, they do IT, programmable logic devices. Okay. They have earnings per share positive, which is good. They pay a dividend low, but you have to take into account that they, even though they have a low dividend, they also have really good growth. You see, these are really, really good trending stocks. So low dividend, so you get the 1% plus the growth. So it's actually pretty good. I would consider this a good buy. Hopefully, this is adding value to you guys and it's not wasting your time watching me do the analysis. EA Games. Yeah, they definitely struggled for a while. They're coming back. They came back. They're hurting now, but their hurt is your victory. 120, 125. Seems to be a wall at 140. 140 to 140. So Watch it bounce. Watch it bounce. EA, it's in the game. EA, it's in the game. PPG. PPG. Okay. Wow. Another range breaker. Range breaker like this. Every time I see a stock that has a range like this, a multi-year range, and then it breaks it, you see this false breakout, dies, and then it comes back up. Usually it never returns to this range again. So let's see what it does. If it can, the next week, let this weekly candle finish out, the next one, and then set a stop here. So the next one, make it for sure hold up above here, set a stop. Set a stop. You set a stop around 130, or you give it more room, 125. Usually will never return to this range again. Unless something terrible happens, like a meteor hits the earth, then everything dies. This is a range breaker. Multi-year range too. So multi-year, anything with a multi-year range, I guess, whenever it break out, they keep going. Example is our Starbucks. This is a stock that I wish I had played. I saw this range. So this is way back when I first started. I saw this range here, multi-year range. And when it broke out, it never really came back until last year. Last year, this was COVID. So because Starbucks is in the food industry, right? That they got hit hard, but they're recovering. So that was like a golden opportunity that may not have never happen again. So take. Yeah, so you see this multi-year range. Ooh, sneeze. Okay. Liberty Broadband. I like the setup. I think something like this might happen again, given how high it is right now. If it does, you could probably see it fall back to 110. I would keep an eye on this one, but it could be 6 months or so before it plays out. So if it keeps dying, it could take 6 months before it breaks. It comes back to 110. But that 6 months wait, you're picking it up at 110 instead of at 150, saying $40. So that $40 you can make back when the stock goes up. Long-term plays. All right, we're coming up on 9:30. So I think I'm going to end the stream here. For those who joined, thank you for joining me tonight. Hopefully you guys learned something. Hopefully it gave you guys some more insight onto how you should use your technical analysis and how you should do some analysis. So thank you again for joining me. This was like last minute because, like I mentioned earlier, I don't know how many of you guys joined us, stayed the whole thing, but as I mentioned earlier, I work full time. So I started a new job this week, so I can't really focus on the market. So the best thing I can do is look at opportunities after market has closed and look for plays that I can potentially do. And then once I have these plays that are mapped out, I can either just wait for them and just set alerts or set future orders so that when they get into those range, they automatically buy. And that's how you can trade and work full time. So that's what I'm doing. But yeah, hopefully, I don't know how many of you guys work full time. I know there's not too many full time traders in the group. So hopefully this gives you an insight to how you can be a full time worker and still make money in the market, and without having the stress of worrying about day trading. Day trading isn't something I would recommend to somebody who's working full time because you need to have a lot of focus. So thank you, everybody. and we'll end the live here. Thank you.